But how many countries can India help? Or even the IMF? How many countries can the IMF help? Sri Lanka's economic crisis is not a one-off. Dozens of developing economies are facing the same problems: lower revenue, rising debt, falling foreign exchange reserves. To put it simply, they're spending more than they earn. And the result is this: a massive debt bubble. How much money are we talking about? Almost $250 billion, $237 billion to be precise. Now this is all foreign debt, which means it must be repaid in foreign currency. But the problem is Sri Lanka does not have any foreign currency. Neither does Lebanon or Ghana or Egypt. So what do these countries do? They default. So far, Sri Lanka and Lebanon have already missed their payments. 17 other countries are at risk of doing that. Put together, these countries are home to some 900 million people. That's almost 12% of the world's population. What would happen if this debt bubble bursts? You saw the scenes in Sri Lanka. Now imagine something similar in Lebanon or Tunisia or El Salvador. These countries have a history of political instability. Protests there could be very different from Sri Lanka. We'll take a closer look at some of them. First, El Salvador. Their fiscal deficit is nearly 5.5% of the GDP. The ideal level is 3%. Their debt to GDP ratio is almost 87%. And by January 2023, they have to make a bond payment. How much? Almost $800 million. Credit agencies doubt whether they can make it. Number two is Zambia. Their projected fiscal deficit is almost 10%. Debt to GDP ratio is more than 123%. Zambia needs external financing to escape this crisis. Last year, they secured a bailout from the IMF. The money is expected to be released this year. Case number three is Lebanon. Projected fiscal deficit is 20%. Debt to GDP ratio is more than 210%. The World Bank is calling Lebanon a zombie economy. They too are looking for relief from the IMF. Case number four is Pakistan. Last year, their fiscal deficit was more than 9%. The new target is 5%. What about debt to GDP ratio? Around 74%. Pakistan wants a $6 billion IMF bailout and they want it ASAP. But the IMF is holding back the money. Case number five, Ghana. Their fiscal deficit is almost 12% of the GDP. Debt to GDP ratio is 76%. So Ghana too is reaching out to the IMF. They want a $1.5 billion bailout. And these are just 5 countries. Most of the developing world is struggling with the same problems. Argentina, Egypt, Nepal, Tunisia, all of them. The question is, how did things get so bad? Because of 3 major reasons. Number one, the pandemic era deficit. Every government had to increase spending during the pandemic years for hospitals, for vaccines, and for economic stimulus. At the same time, their revenue plunged. Countries like Sri Lanka depended on tourism for revenue, but that income disappeared during the pandemic. The result was this: the deficit widened. Reason number 2 is a stronger dollar. The Federal Reserve has been increasing interest rates to tackle inflation. And one side effect of that policy is the dollar gaining on local currencies. You must pay more to service your debt. You must pay more to import goods. And this is draining foreign exchange across the world. The same thing happened during the 1970s. It was called the Great Inflation. We told you about it. The Federal Reserve, the US Federal Reserve, hiked interest rates to cool down prices, to control inflation in the 1970s. So the dollar went up and emerging economies suffered. In the very next decade, the 1980s, Latin America went into debt. But this time, it's not just Latin America, it's everywhere. Latin America, Asia, Africa, literally every continent. And finally, reason number 3, poor leadership. In Sri Lanka, Gotabaya Rajapaksa made mistake after mistake. He banned chemical fertilizers. The agricultural output suffered. He slashed taxes. The economy suffered. None of these policies made any sense at the time. In El Salvador, the president bet on Bitcoin. He made Bitcoin legal tender in the country. And since then, Bitcoin has hit rock bottom. It is 48% down in the last 6 months. These are the 3 major reasons for the debt bubble. Other factors are making it worse, like Russia's war on Ukraine, or Western sanctions on Russia, or China's zero-COVID lockdowns. It's almost like a perfect storm. The question is there a way out? The immediate option seems to be an IMF bailout. Most of these countries are asking for one, but going forward, what can they do? A, they can diversify their economy, and there's a reason why India or China or Mexico are not facing a default. That's because their economies are more resilient. They do not depend on one single industry. And B is fiscal prudence. Countries like China will keep promising big-ticket projects, but in reality, they're just white elephants. More often than not, they saddle countries with debt. On paper, these measures are easy. Diversify your economy, say no to loan sharks like China, but in reality, it's a long and painful process. It will take patience. It will take public resilience. But most importantly, it will take smart leadership. WION is now available in your country. Download the app now and get all the news on the move.